All right, welcome. Today we are tackling one of the biggest questions out there. What is the absolute best way to grow your money? We're going to put three of the most popular investment options head-to-head in a proper showdown. So let's just dive right in.
I mean, this is the question, right? It's on every investor's mind, whether you're just starting out or you've been at it for years. We all want to know if there's some kind of magic bullet for building wealth. Well, today we're putting three heavyweights into the ring to find out. We've got stocks, real estate, and managed funds. We're going to break down how they really perform so you can start to figure out what might actually work best for you.
Okay, first up, the stock market. You know, for so many people, this is the classic route to building wealth. But let's be honest, it can feel like a pretty wild roller coaster. So let's look past all that noise and see what the data really tells us. To do that, we're going to focus on the S&P 500. Now just think of it as a giant basket holding the 500 biggest public companies in the US. It's basically a powerful snapshot of the entire market's health, and believe me, it's one of the most watched benchmarks in the world for a very good reason. And here's the number that really matters: 10%. Over the long haul, that has been the average return the S&P 500 has delivered each year. And that powerful number even includes dividends. You know, those small, regular payments that a lot of companies share with their investors. I mean, that is some serious growth potential.
And listen, this isn't just some ancient history. While returns obviously go up and down year to year, the market has continued to show some incredible strength. Not just posting double-digit gains in several recent years, but also pushing the index past major milestones to new all-time highs.
But okay, here's the essential trade-off, because there's always one. The benefits are huge. Stocks are highly liquid, which just means you can buy or sell them almost instantly. And they harness that incredible power of compounding we're going to talk more about in a bit. The drawbacks: that short-term volatility can be seriously nerve-wracking. And that creates a huge emotional risk of selling at exactly the wrong time out of fear.
Now let's pivot to our second contender, real estate. There's something so appealing about owning a tangible asset. You know, building your wealth with actual bricks and mortar that you can see and touch.
This quote right here really gets to the core difference. Property gives you something physical, something real, plus that powerful potential for rental income. But in exchange for that stability, the growth is often slower and steadier compared to the stock market's potential rocket ship highs.
So what's the bottom line here? The big benefits are that potential for a steady stream of rental income, and the fact that a physical asset can be a great shield against inflation. The downside? Well, you need a lot of cash up front. And you can't just sell a house in 5 minutes. It's what we call highly illiquid.
So, what if you want to invest, but you don't want to spend your time picking individual stocks or, buying an entire building? Well, that brings us to our third powerful option, the managed fund. Think of it like investing with a professional co-pilot. The concept is actually brilliantly simple. A managed fund just pools money from lots of different people, and a professional manager invests it for you across a whole range of assets. This gives you instant diversification, and they come in different flavors, like mutual funds or the super popular ETFs, which are exchange-traded funds.
The appeal is obvious, right? It's simple, and you have an expert making the calls. But, and this is a big but, there's a massive catch you have to watch out for. Those management fees can really eat away at your returns over time. And what's really surprising is that a huge number of these professionally managed funds actually underperform simple low-cost funds that just track the S&P 500.
Okay, so we've looked at three different ways to invest, but there's a powerful force under the hood that is the real engine behind all of them. It's time we talk about the secret sauce.
It's called compounding. And this is the magic of your money making money, which then turns around and makes even more money. It's not just linear growth, it's exponential. It's what turns small, consistent investments into serious wealth over time.
So how does this incredible engine actually work? It's really just a simple 4-step cycle. First, you invest your money. Second, it earns a return. Third, you reinvest those earnings instead of spending them. And now, your bigger pile of money starts earning returns on everything. It's a beautiful cycle that builds incredible momentum, whether it's through stock dividends, rental income, or fund growth.
So, after looking at stocks, real estate, and managed funds, which one wins the showdown? Well, the truth is, there is no single best answer. It's all about building the right mix for you.
This summary table really puts it all side by side, and it's definitely worth a good look. As you can see, stocks offer that strong long-term growth potential, but come with that volatility.
Real estate gives you stability and income, but it's illiquid and expensive to get into. And managed funds? They offer simplicity, but you absolutely have to watch those fees. The best 4 category at the bottom? Well, that really just depends on your personal goals.
Because ultimately, it all comes down to this question. Your perfect strategy is going to depend entirely on your own goals, your timeline for needing the money, and frankly, how much risk you're truly comfortable with. The most successful investors, they often use a mix of these. So the real question is, what's your winning mix going to be?